Hey everyone, and welcome to the PivotBoss Pre-Market Report for April 21st, 2016. I'm Frank Ochoa, aka PivotBoss. First off, my apologies for not putting out many pre-market or post-market reports here recently. I've been very busy with PivotBoss Masters and the recent training, which is going fantastic, by the way. But here's a look at the markets, and let's see and catch up to what we're currently at. Looking at the ES in the daily time frame here. The first thing is price held. Price held off the previous month's high, 2064s. That was an area we've been talking about as being significant. The previous month's high right here. And you can see how price initially faded away from it, held the top of the monthly pivot range, pushed through and held above that 64, and then launched off of it. And right now testing two important PivotBoss pivots. The first one is the primary weekly bull target. So that's the PivotBoss ADR primary target. That's 2103s, and that was reached. And then also this level right here is also the 25% monthly PivotBoss pivot. That's the R1 pivot. That's 2102. So we do know that after expansion from the previous month's high, the expectation would be to push into the 25% PB pivot. Now, right now, that's a big time target, but that's also an area where new shorts look to push price back toward the previous month's high from here. Given that price did already expand into this area, any pullback should still be considered a short-term buy, but a failure would open up a move back across the range. Because remember, we've been looking for an opportunity to see a larger range create around this level. So we haven't seen it really develop or create so far. I mean, we've seen it push around here, then we've seen another push up. The expectation, given the current rotations of the market here, would be that price kind of pulls back off that zone, and then we see another leg perhaps attempt to find that high. So right now we could be looking at a short-term rotational push downward into 2077.5 and perhaps as low as 2061s. Now, if you look at 2061s here, that is the high volume node, and so it went bid here recently and then came back and retested it and defended. So coming back to retest it again ideally would be defended by bulls, but given that you've already seen two defenses off of it, or a push through and a defense, just be careful of it perhaps going offered, because that would open up a move back into the next LVM below, and that's when we could see the 2000 to 2009 range. All right, taking a look at the ES in the intraday time frame right now. Price holding around the 25% weekly pivot, and that's the 2094s. 2108 is the 50% pivot, and right now we kind of had a trading range that developed most of yesterday, and then price pushed up and is now trying to hold above the previous session's close, 2098. So that's going to be an early level to watch right here. Failure to hold 98s opens up a retest back at 84s. And there's a zone between 82 and 84 here, 84.5, where bulls may want to come in and defend short term. Again, any failure to hold this area will open up an option lower, and perhaps you see a retest back toward that 2061, which is the HVN. All right, let's take a look at crude oil. Here's crude oil on a daily time frame right now. This one has been significant. Where we last left off, basically, we had price rotating off of the recent highs. We've since rolled over to the M6 contract. So these recent highs were 42.50. Now they're 43.85. And I mentioned if price comes back to the midpoint of this range, or even as far as the bottom of that range, that was going to be where bulls were going to come in and defend. So we saw price gap down Sunday evening, especially off that news, off the oil news, and basically price came in and filled that gap, took HVN bid here at 42.60 and came right back to the top of the range and is now holding above the top of that range at the moment. So that was a very quick buy opportunity way up, and we had it in the trading room also that we would likely fill the gap at some point, and also Tuesday morning basically noticing that 41s were bid. That gave us an early idea that we were likely headed back to 5-day value and continuing higher. So we had it mapped in the trading room really nicely. And now the idea is to watch to see how price trades around 43.85. Failure to hold it opens up a big retest at 42.60, and I believe a retest will be defended for a continuation toward the 25% expansion target, which is 45.66. So that's going to be the early idea right now. I think on a longer term basis, my trading room knows exactly what our levels are, and for the most part, what we're looking for is for this current trending behavior right now to manifest itself for another push higher into this HV and above. So right now we're looking for clues that we're likely headed into 49s with a shot to even see a continuation into 54.32 over the coming months. So this is a swing position style idea here that pullbacks likely pushing into the next levels. But even further than that, we could be looking at the next HVNs above. And that really all comes into play with how price also plays out at this LVN, which is very significant. That's the 46.65 LVN. I think should price see expansion, that LVN likely to be faded on first test. And then that next test needs to be defended, and that could get you squeezed into the next HVN above. So a couple of things to think about on a higher time frame basis for crude oil. Now looking at the intraday time frame, obviously we had a big time unwinding of the bears the other day here. Big time short squeeze. Big range formed here. And in the trading room, what we talked about was the pinching of the PivotBoss band. So the PivotBoss pinch came into effect, and we knew about it. But right here is when we saw significant pinching. So we said right now is not the time to do anything. You're likely going to see it coil, but at some point you're going to see major expansion, and it's going to be significant. And that's exactly what we saw. Big time unwinding of the upside buy stops, major upside push, unidirectional trending behavior, minimal counter trend rotations, all defended at the LVNs on the rotations on the 5-day profile, so and the 1-day profile. So very, very nice the way it played out. And right now we're trying to hold right at and above the previous week's high, 43.77. So you can see exactly what's going on. The market may be short-term over extended here. We have the 25% weekly target right here. Anytime you get to the 25% target, it's usually a fade opportunity, and you can see prices have certainly stalled so far. So right now we've kind of got a chunky little profile that's played out overnight, short covering, P-shape profile right here. So you can see the rejection here now holding. If we don't get new buying that comes in above 44.56, this could be an opportunity to run the stops back below the previous week's high into the weekly pivot range here, the top of it being 42.18. And so that could be where we're looking at in terms of a counter trend move. I think overall, as long as price remains above these recent highs here, there's a nice LVN developing, and this high right here, this is where bulls are positioned right now. So a rotation into this area could spark the creation of a trading range between these levels. So we could see two-sided trade basically between 43.50 and 44.60. So look to fade the edges should this occur. All right, now let's take a look at gold. Gold, we talked about being within the trading range and the likelihood of price jumping into the previous week's high price into the 1256s. And in the trading range, market, we talked about there being no real edge right now. So there was no actionable ideas for gold. And we basically left off right where we currently are. And so in the trading room, what we were looking for was on this expansion day right here, this expansion day right there. We saw this high, and we saw a major short squeeze. So in the trading room, what I mentioned was if price pulls back to this zone right here, that's where you defend it right there, and you look to squeeze it into this target right there, previous week's high and that 1265. So basically 64s to 65s. And so far you've seen it played out perfectly, and we've come within just mere ticks of that target so far, but we remain within the range. So that was about as far as we saw that we could go, because if we go beyond there, this is proven to be an area of rejection, and prices have been returned back to the bottom of the range. So be careful at prices above 65s and especially 70s, because that's been rejection. You could look to fade that back to composite BPOC into 1236 half. Right now we're still in the range, The range has been coiling up, which suggests that at some point we're going to get some expansion here, and that could happen rather soon. But you can see how the range had widened up to offer two-sided trade, but so far recently we've been coiling toward the apex. That usually means we could expand the range a little bit more to either widen the trading range for two-sided range, or that could see expansion for actual continuation or a distribution markdown phase. So we'll watch this, but right now, again, not super actionable unless we get above these levels. All right, now if we look at the NQ finally, the NQ here I thought had a great shot to be forming a near-term top here. And we talked about it in the trading room here recently, where we saw a major rejection here. We left these highs here, rejected, run the stops above them, and then we closed below the week's close here, the previous week's close. So that day right there marked a short-term top for us that could have or may still create a top that leads to the opposite end of this range and widens this range out. Remember, we were looking for, after this rejection, we were looking for a top to fade back down and run the stops below this low. And that impulse move could set the key range for a wider range of distribution perhaps. And so right now it's still in effect as long as this previous week's high continues to be defended. So we were talking about 45.50 to 45.55 being defended, and even up to 63s, and so far you see the very edge of that level being defended. Right now, very modest inside day developing as we head into RTH with only 39% of ADR traded so far. Again, if prices remain below this high, I think there's a good shot to see a move against the range, especially if the stops come out below the previous month's high. There is still a shot to squeeze though and continue higher because the market has still been quite bullish. So any pullback right now will likely still be seen as a buying opportunity until proven otherwise. Even if price rotates all the way downward, we're still in a buy the dips type of mode right now. Looking at the intraday time frame, just for some kind of immediate satisfaction here, we're kind of chopping around 5-day BPOC. And in chopping around 5-day VPOC, that tells you there's no real edge right now either. So we're just right at value. We're right at the center of a range. You can see the 5-day profile here has kind of a twin VPOCs feel to it, but it has a nice chunky middle value area that tells you that prices are just coiling up right here. And that's really what's happening. So when you're at the center of this range, there's no real edge. You have to wait for price to get out at the extremes outside of value and look to return it to value. When price comes down into this area, look for signs of a rejection below the previous month's high and then bring it back to value. So those are the primary ideas right now. Nothing really to do as we head into RTH until we see some sort of movement to unfair pricing. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck and trade well.